Good morning, ladies and gentlemen. I'm fucking ready. I'm pumped. I'm ready. Can you guys hear me? Yes. Okay, fire. Let's go. Yeah. What a motherfucking morning. Indeed, ladies and gentlemen. Gentlemen. I haven't slept shit. Because I want you guys to understand before, like for me to get on here and talk for 2 hours, I can't just wake up at 6:30. Like I gotta be awake for like an hour before, hype myself up, look at myself in the mirror and say, "You're the fucking man. You're the fucking man, and you're gonna go out there and do the best fucking class you can do. And you're gonna ignore all the trolls and you're not gonna let them get to you, and you're gonna only focus on the people that want to learn today. And today is an amazing day because we have just made America great again. Now, this is not about political or this is not about fucking like this is not about oh, I don't like this side or I don't like this side. The reality of the situation is this is the best thing for the economy. Whatever side you're on, I know you know that deep down, whether you like him or not, this is the best thing that could happen to the economy and to all of us right now, which are traders, the people that want to make money from the economy. The economy is about to get better. The volatility is about to get better, and we're about to capitalize off of that. It is just the simple truth. Whether you like him or not, that is the core facts of what is going to happen. And I remember that I started like actually like getting like a feel of what the possibilities of the markets were when Trump was in office, which is in 2020. I remember. That's like when I really like had my breakthrough. So, all right, sick. Hold on. I'm just gonna, what the hell was I gonna do? Oh, okay. All right, sick. I'm jealous, bro. I'm in the UK. Oh, dude, hop over here, bro. Oh, I'm excited. I just hope there's not another pandemic and they fucking shut. I mean, even if there's another pandemic, I think that's fine. I think it's gonna be great, honestly. Type one if you guys can hear me. Type two if you can't. Okay, everybody hears me. Sick, amazing. All right, cool. Let's give it about 1 more minute. We're missing a couple of students. Let them hop on. Okay, there's just one guy spamming. Here we go. What's this guy saying? Jake. Jake, dude, I don't even understand your question. I think there's a couple of people in here that. Oh fuck, my cat threw up. And there's a couple people living here that their English is not the best typing, and they want to get the question across, and they just don't know how to explain it correctly. Just run it through ChatGPT. Whatever you want to say, just put in ChatGPT, get it correctly, and then I can read it and understand it. But sometimes it's like all over the place, and I just don't understand it. So, what's today's topic? Oh no, I just got on here to say make trading great again, and that's it. I'm not gonna do anything today. The joke to this day, fucking three. All right, cool. So let's get started. Let me turn off the chat. All right, sick. So good morning, ladies and gentlemen. Today we are going to be talking about many different points. So I think I'm just going to show all the points that I'm going to be talking about. Maybe this way you guys know not to ask, or maybe not know, but get more of an understanding to not ask questions about other things. Just going to make it a lot easier once again for all of us. Again, we are here together as a team and we want to progress as a team. So this is what we're going to be talking about today. What is a I can just copy it. It's so much easier. All right, so today's a little jam-packed day, but again, it's going to be somewhat fast if you guys let it be fast because it's what it is. It's not how it works, how you identify it, or how I use it. It's what is this? Right now, we're officially getting into the technical side of things. And it is impossible for you to know how to use these things because I haven't showed you the how. The how is next week. Now is what these things are. So let me start off with this one. All right, sick. So these are going to be the things that we're going to be talking about. What is a candlestick? Not how it works. What is a resistance? Not how it works. What is a support? What is this? What is this? What is this? What is this? Not how it works. Very simple. So let's start off with what is a candlestick? All right, totally spelled that incorrectly. Whoa. What is a candlestick? So a candlestick, like we mentioned on not yesterday's class, but the first, is a direct representation of the market at this very moment. This candlestick is the stats of this market at this very moment. This is the price of Bitcoin, which, by the way, we've just hit a brand new high, which is amazing. And it is being showed to us via a candlestick, which is the Japanese candlesticks, which, by the way, every single person out here has to read this book, but you should not read this book just yet. I want you to read this book on the weekend. I want you to read it on Sunday before we come into the markets and we start reading on the how everything works. So there's a reason why I haven't told you about anything. And the book that I'm going to tell you to read, I'm going to tell you to read it on Sunday. So I'm just going to put it here to the, where is it, right here? So what the candlestick does, it represents where price is at this very moment. We can go, for example, on AUD USD. This is where price is at this very moment. Now, when price is being pushed down, you see the numbers being directly reflected here on a candlestick or a line chart. It's going to be the exact same thing. So we can look at it on a line chart, or we can look at it on a candlestick. A candlestick is going to give you an idea of how the structure and the wicks work. Now, what are wicks? What is structure? We're going to get into that again later throughout the bootcamp. But the candlestick is what's going to give you the live feed of what the market is. And it's going to tell you where the market was with the wicks and where the market can potentially go based off of the price action. Price action are these candlesticks and the way they form stuff. It's a lot easier, or based off of my experience, to be able to tell where the market is going to be able to go when you see bullish momentum with candlesticks rather than just lines up and down. Lines up and down, it's kind of hard to be able to tell where you want to enter. Why should you, like, this is just a line. There's no real entry signal you can get off of a line. Like, how do you know that this is rejecting here? You don't really know because it's a line chart. The candlestick is what gives you that confirmation that there is rejections from here. Now, how you read this rejections and what's real and what's not, once again, we're going to get into that later throughout the 30-day bootcamp. Right now, I just want you to know that candlesticks are a direct representation of what price is doing at this very moment. When price is going up and buyers are stronger than sellers, the candlesticks are blue. When sellers are stronger than buyers, the candlesticks are red. Now, how these candlesticks work and why do they leave this little line to the top and the bottom, and is that important or not? That is next week on the how. What I want you to know is that the candlestick is what you're going to only be looking at to identify when you're going to enter a trade. Picture the candlesticks as the letters when you write a language. So when you go speak Spanish, when you go speak English and you start typing or writing the language, whatever, you are writing the language in the form of a letter. This is the letter of the language that you are reading, speaking, or the market is speaking to you. The market is speaking to you this language, and this is the way it is speaking the language to you with these candlesticks. Now, these candlesticks are going to be your best friend or your biggest enemy, either or. You're going to love looking at these things or you're going to hate it, because every single new person in here has to put in their 1,000 hours and their 10,000 hours. I've done it. Everybody's done it. It's part of the game. Now, what are these 10,000 hours? Is when you just sit in front of the computer and look at this. I remember when I was starting to trade in like 2019, bro, I would just sit here and I would just be on the 30-minute and the 15-minute. And I would just want to predict what that candlestick would do every closure of the 30-minute, every closure of the 15-minute. Now, this candlestick is going to give you a different representation every single time frame. So the daily candlestick is going to look completely different on the 4-hour. The 4-hour candlestick is going to look completely different than the 30-minute. And it is exactly the same. And again, when it goes into the how, I'm going to explain how you're going to use these candlesticks in your favor and how you're going to actually be able to capitalize off of the market with these candlesticks. I don't really want to get too deep into it right now because I know I'm kind of repeating myself a little bit on what I said on Monday. And that's what I want to avoid, because there's a strict order that I have to go through the 30-day boot camp for it to make sense. I don't want to, like I said, I don't want to just overstep, because then when I get to points like this, I'm just repeating myself on things that I already explained. So the how it works, why daily, why the 1 hour, why all this stuff, that is going to be on the how we break down the candlestick. So just give me a 1 second. Okay, perfect. So this is what a candlestick does. It's going to be the way the market gives you the history of what it is speaking to you when it goes up and when it goes down. That is what a candlestick is. If you don't understand what a candlestick is, please type 2. If you understand what it is, please type 1. Now, if you don't know how it works, or you have a question on the how, like think about it. If right before you're going to type your question, if it's a how question, please don't ask it, because that is for next week. So you can save your time typing it and me reading through the question so we can advance to the next point and actually break things down in a more effective time, and I'm able to answer more questions that are relevant to this topic on what it is. If that makes sense, type 1. If it doesn't, type 2. Perfect. That's what I love to see. All ones in the chat. Perfect. Perfect. Okay, perfect. Now, perfect. Great. Amazing. Now, I saw a couple of questions, which I wanted to kind of leave it on the how, but it does make sense to add it right here on the what it is. Now, where the hell did it go? I think it's on GBP. No, it's on Bitcoin. Okay. So now we have kind of continuation to the candlestick, which is what I wanted to get into next week, but I could do it now, which is the wick. What is a wick? So a wick is this right here. A wick is the trail that the price has left in the market. So what a wick is part of the candlestick. It's like the footprint of the candlestick. So let's say right now, when you're hiking up your mountain with your chick, you got a smile on your face, you're going up the mountain. When you're going hiking, you're going to leave a trail. Whenever you step, there's a trail going to be left. Whether you go up this mountain or this hike and you say, fuck that, this is too steep, I don't want to do this, and you come back down, you went there. And when you went here, your footprint stayed there. You can't not erase that you went there. Yeah, you could brush it off, but that's not how this works with the market. So when you walked up this hill and then you decided, you know what, I'm tired, I don't want to go anymore, and you go back down, you left a footprint that you went to this point and then you made it back. Now, wherever you decided to stop, you stopped, but you made it there and you left that trail. It's the exact same thing with these wicks. This candlestick at one given point, it was a full-blown candlestick all the way down here. Now, if this candlestick decided to not want to be here anymore and it wanted to reject this level and it came back up, that's fine because it still has 9 hours to close. This is the trail that that candlestick left. Now, this is not a confirmed trail into this candlestick does not close. More relevant or easier example to use is probably the most frequent. So this candlestick at one given point was all the way up here. And since it did not like this area or the sellers were stronger at this exact spot, whatever, price decided to pull back down and then it closed here once the timer was up. Now, this is the trail that the wick, this is the trail that the candlestick left. Every single candlestick tends to have a wick. I'd say it's a 95% that every single candlestick is going to have a wick. See, right now, this is creating a potential wick to the upside or wick to the downside. You never know where you're going to have the wick. You see how it's going up right now and it's kind of, so look, if it breaks above, so look, this is the highest point. Okay, there you go. That was the highest point that it was before. That's where the highest point of the wick was before. And now it moved up. So now this is the highest wick. And now I moved up. So now I moved up. That is the highest point of the wick now. So if it goes higher and it goes back down, the trail continues to move up and down with it. So this is the highest point that candlestick has been at this very moment within these 12 minutes. If we, there you go. So we just broke above it. So now that we broke above it and it goes back down, the trail that it left is now here. So this candlestick can now go all the way down, but at one given point, it was at here, which is exactly what we're seeing right now. It was just there 5 seconds ago. So the wick is just the trail that the candlestick leaves. Now, the wicks help us make a decision because it is a form of a rejection of the candlestick at that very moment. Like if you go up a trail and when you go up this trail right here, you see 100 footsteps go to this point and turn around, you're going to make a decision and be like, fuck that. There's something there that 30 people went to that and did not want to keep going. I am not going to keep going. So you're making a decision off of what the history of the trail is showing. It's the same thing here. If you have a really big wick, that means that a lot of the market was pushed to this point, but clearly there was a lot more people rejecting this area. Fuck that. You don't want to go that way because it's clearly being rejected. A wick is a form of rejection of wherever it is, whether it's a structure, area of interest, which we're going to get into later. It is a form of a rejection. And clearly, this is the outcome of a big wick. So wicks can also be filled or they can be rejected. Now, how that works, we're going to get into that later into the 30-day bootcamp. Right now, we just want to cross the path on what a wick is. So the wick can be used to confirm that this area is being rejected from, or that clearly there's stronger than the other. Now, there's sometimes where there's no wick, like right here. So this candlestick closed, and when this one opened and it continued to just push up, this is a clear indication that there's no wick to the downside, meaning that there's no potential sellers that were even willing to make it to this point. It just outdid everybody else and it just continued to go to the upside. So it's just, for example, when you hop into a new trail, so let's say you're gonna, so this is a great example. I need like 2 trails. Let me see. Let me see. Give me a second. I literally need like a split trail. What the fuck am I looking? Okay, this is perfect. So let's say you get to this very point right here. Now, the market, once it comes into this area, I think this is a fucking shitty example. The point that I want to make is once the market is, let's say you have your trail, right? When you have your trail and then you have the option to go to this area or to go to this area, people, once they are coming up the trail, they'll come here and then they can decide, well, do I want to go to this one or do I want to go to this one? And then here's where all the footprints are being created of people thinking about if they want to go here or if they want to go here. There's a footprint. And then they say, you know what, fuck it, let's just go here. But when you have something like this, when you don't have a wick, that means that people saw this trail and they saw this trail and they didn't even think about it. They just said, yeah, we're just going this way. There is no thought process of them wanting to think about going here or going here. So when you have a candlestick that opens and it has a small little wick, that's that people thought about it for 1 or 2 seconds and then they just wanted to continue. So clearly, when people decide to go to one trail versus the other without having a thought process and not thinking about it, clearly this is the smarter decision and this is the stronger trail. It's the same thing with the market. When you have a candlestick like that, that does not have a wick, that is that you have a stronger momentum in that direction versus the other. Now, if that makes sense on what a wick is, not how you can make money with it, how you can capitalize on it, blah, 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 blah. Type 1, if not type 2. Sick. Okay, I see some 2s. Please, the people that have a question, please ask for it now. What is the book called? I'm going to tell you on Sunday or Saturday. Re-explain that last point. Jake, don't worry about it, brother. If you got it, you got it. If you didn't, you did it. Explain the last point again. Sure. So when you have a candlestick with a small wick, for example, let me see. Okay, so let me see if I can find an example. I feel like it was a little tricky with that trail shit. I can't even lie. So let's say this candlestick closes. Let's do something actually on the 5-minute just because it's a lot quicker. Okay, so this candlestick is going to close in the next 1 minute and 49 seconds. So the next candlestick, when it opens and it just opens and it heads up and it does not create a wick to the downside, which I actually have to do a little bit bigger for it to look better. And if it does not create a wick to the downside and it just opens up and it just keeps going, this is an indication that this has very strong buyers and not as strong sellers. But if the market opens up as soon as this candlestick closes, because once this one closes, so this next candlestick can probably open up here, depending how this candlestick closes in the next minute. So see, like actually, like you're seeing how we're constantly creating this wick higher and higher and higher. Like it was literally just here a minute ago. Now it's all the way up here. You're seeing how that wick is constantly getting pushed up because this is where the trail of the market is. The market, every single time it pushes up or pushes down, it leaves a trail. So you never want to confirm how strong a wick is until the candlestick does not close. Now, this is something that I learned after putting in the 10,000 hours. Like right now, I'll be like, oh shit, it's rejecting. There's a shit ton of sellers. I'm going to sell the market. But it's like, dude, why are you going to sell? That candlestick is not a confirmed wick yet. Like, look what we just did in 10 seconds. Now we look like we're good to sell. And when it breaks above here, then we look good to buy. You make a decision based off of when it closes, not when it's active. Because see, look, now it's looking good to buy. 10 seconds ago, it looked good to sell because it had a wick rejection. Now we just created a new high. So you could only make your decision once the candlestick is closed. So let's make a decision now, and it looks like it's going to close very strong. So wherever this candlestick closes and the next candlestick opens, how it just did right now, and you see how it barely created a wick, that is good because that confirms that we are having, well, which we don't know just yet because we have to wait for this candlestick to close in the next 5 minutes. But it's in the event that it closes with a small wick like that or no wick at all, it's good because that confirms that the buyers are just so much stronger than the sellers that it wasn't even able to have a little bit of movement to the downside for the buyers to outweigh the sellers. The buyers just were so much stronger, they didn't even give them a chance. So this is a perfect example of it. This candlestick opened, and as soon as it opened, it just shot up. It did not give the sellers an opportunity to even create a small wick. Now, if it does create a small wick like this, and then at the end it does close like that, it's fine as well. Just if it doesn't have it, it's even more of a confirmation that it is a good confirmation that this price movement is very likely to continue heading to the direction you're going rather than not. If that makes sense, type 1. If it doesn't, type 2. This is literally a perfect example. Like, you cannot ask for a better example than this. Perfect. That cleared things up. Perfect explanation. Yeah, literally. So this candlestick open, created a very small wick, boop, just shot up. Didn't give it time to do something like this. Now, again, this is something that we can possibly still have. Like, this market can, from this very moment, just shoot all the way down. It can literally come here and then go all the way to the downside, create that wick, and then go all the way back up. Like, these are things that we don't know until it does not close. So for right now, we are having confirmation that it is still very bullish. 2 longer wick, higher risk. No, I'd never said no. Longer wick, higher risk. No, that's more on the how, but yeah. What if we don't see a wick at all? Is that good? Yes, that's good. Which time frame do you recommend us to look at the candlesticks? That's more on the how, AJ, and we'll get into that later. Best analogy ever. Yeah, exactly, Hunter. Yeah, perfect. Can the wicks change once it shows? Wait, you keep saying does not close, or does it? Pablo, what do you mean? Do wicks put off certain trades? Yeah, and we'll explain that on the how. Do you favor the way certain candles look over others? Of course, but that's more on the how. Do you recommend later? That's on the how. Can it still be bullish without a higher high? We haven't talked about higher high yet. We're only on what the fuck a wick is. So you see right now, that looked very strong to the upside. And look at it now. Now it looks like it's gonna reject. So you can't confirm that a candlestick is something until it has not closed. I'm just reading some of the questions. I can tell that people understood this better. The longer the wick, the better the rejection. Yes and no. It's more on the how. Do you ever use volume? We're not there yet. Yeah, people just want to jump ahead. All right, sick. I just wanted to. Yeah, some people are just want to get ahead, but it's okay. It's what we're here for. Trust me, we got so much time, guys. I actually want to see how this is going to close in the next 50 minutes, 50 seconds. Let's see. So right now it looks like a rejection. So literally, I've seen candlesticks, and bro, when you guys put in your hours, you're gonna see it. Like, you're gonna see a candlestick like this, and you're gonna be ready to enter the trade. Like, literally be ready to click the buy or sell button. You just have to wait for the closure of it. You always, always, always have to wait for the closure. Now, don't ask me, when do you not wait for the closure? What, no, dude, you don't. Like, you don't go out there and fucking, I don't know, like, you just don't go out there and punch someone in the face. You just don't do that. Like, you just don't do it. Same thing. You just don't take a trade until the candlestick hasn't closed. Now, if you do, there's a consequence. Same thing. You go out and you punch someone in the face, you get arrested. You get assault. You get arrested for assault. That's the consequence. So let's say you would have taken the buy. Now it would have potentially rejected. So you see how it went down a little bit. It was red for a second. There you go. So you see how now it's creating the wick to the downside. There you go. Like, this is literally happening in real fucking time right now. I can't even make this shit up. So now if this candlestick decides to have a push to the upside now, this is going to be the wick that it left to the downside. The only way to confirm if that's a wick or whatever, we have to now wait for this 5 minutes to close. So this is what I'm saying. Like you have to put in the hours. I'm telling you, I literally would look at the markets for hours, and I would just try and predict what the candlestick within that 5 minutes was going to do, within that 15 minute, within that 30 minute, within that hour. And then that put me in sync with the market, and it let me have realistic take profits on the hour, realistic take profits on the day, on the week. Because, yeah, let's say I enter a trade right now, for example, right? This is a shitty example, but let's just say I enter a buy right now and I want to have my take profit here. The goal of every trader is as soon as you enter the trade, your trade just does this. But that's not real. Like that doesn't happen every time. Does it happen? Yes. Is it real? No. But what I would do is with putting in my time, I would figure out how many candlesticks in the 5 minute had to be created in order for me to then get this 15-minute candlestick to go here. And then how many candlestick I needed to then get on the 30-minute for me to go here. And then I worked backwards. How many 5 minute candlesticks that I have to get to make it here? So it just put me in a mindset where I would know how long I would have to wait in a trade. And some people are fascinated when I can literally predict, like, yo, this shit's gonna be here by Thursday London session. And it gets there by Thursday London session. Why? Because I just know how the market moves in terms of time. Like I don't want to get into it. I'm gonna get into it later on the how, but whatever. If you guys understand everything, yeah, I just go into a fucking crazy rabbit hole. If you guys understand what a wick is, type one. If not, type two. All right, cool. Yeah, there's just a lot of things that not your average person kind of does. Can the wick be on both sides of the candlestick? Yes. All right, sick. Next question. Let's move on to now. Where the fuck is it? All right. All right, cool. So now we understand what a candlestick is, what a wick is. So what is resistance and what is support? Interesting. What is resistance and what is support? What do you guys understand that a resistance is? And what do you guys understand that a support is? Okay. Okay. Yeah. I'm just reading what you guys are saying. Yeah. I have like one fucking hair from my mustache that is like poking up, and whenever I talk, it like goes into my nose and it fucking tickles my nose, dude. It's like trying to like change the way it's set, bro. Fuck. Us to have guys that have beards, they would understand. All right, sick. Okay, so I got some of you guys understood, some of you guys don't, which is good. I was just very curious. So, what is resistance and what is support? So, right now, right? I'm fucking 6'2". Look at me, right? Look at me. Huh? Huh? Look at me. I'm fucking 6'2", right? Now, when I get up off this chair, my head is very close to this fucking roof. The roof is my resistance. The roof is not going to let me continue to go through. That is the resistance of me. And I am a candlestick, the candlestick that we were just breaking down right now. And I am going to try and get up and break through the roof. So, like the top of the Zoom shit right here. Let me actually do this. Okay. So the top of the Zoom shit is the resistance, right? Which is where the hat disappears. That is the resistance. So what a candlestick does is it constantly tries to break a resistance. And if a resistance is strong enough, it's going to constantly push you back down. So this is me trying to get up, go through this roof, but the resistance does not fucking let me. It is capping me to break through this resistance. Now, if I'm tall enough and I'm strong enough, as I am, I will break through the resistance. Oh, I hope I won't bust my ass. I will like break through the resistance, and then once I'm here, I'm then gonna use this shit as support to then get myself to the next fucking level. Does that make any fucking sense? So resistance turns into support. Now, what is support? So right now I'm on the second floor of my house, right? So under this floor, if I were to be downstairs, this would be the resistance. When I break through the second floor, then I use this floor as support to then go up to the next floor. I don't know if that was funny, but does that make sense? That got very simple over the top. Yo, it would have been crazy if I would have busted my ass, dude. Bro, fucking hair, dude. Jesus. Okay, very clear. Okay, perfect. So let me just explain it now in terms of the charts. So a level of support and resistance are basically the same thing. Now, when I mean they're the same thing is they go hand in hand with each other. A level of support can turn to resistance, and a level of resistance can turn into support. So these are a perfect example of resistance when price goes into an area and then it rejects. When price gets into an area and it rejects. When price goes into an area and then it rejects. Now, when price breaks through it, price will come back and use this area as a support. Use it as a support, use it as a support. But now if price breaks through it, it comes back and it uses it as resistance. Uses it as resistance, or it breaks through it as support, breaks through it, and then resistance. This is what support and resistance is when price is held up from this area or price is held down from this area or pushed down, whatever. When price is pushed down, it is resistance. When price is held up, it is support. Resistance can turn into support, and support could turn into resistance. This is what support and resistance is. When you want to buy, you buy at a support. When you want to sell, you sell at a resistance. When you want to buy, but you're at resistance, you have to wait for it to be used as support. When you want to sell, you have to wait for the support to be used as resistance. If that makes sense on what is support and resistance, type 1, if not type 2. This is just what it is. It's fucking impossible. You don't understand that shit. They're the zones where you want to buy or sell happens. No. So a lot of these questions are going to be on the how, and we're not at the how just yet. Sure, I'll repeat it. You know what? Let me think how I can fucking get creative with this shit. I don't know. Let me think. I'll do like let me think. Give me a second. Let me cook. Funny when I go on here, bro. I just use it. What is my mind thinking? This doesn't even make sense, dude. Holy shit, this guy doesn't have a leg. Shout out to this guy climbing a fucking mountain without a leg. Fucking legend. Let me think. Oh shit, I put a limb. Oh my God. Ledge. Fuck. Fuck. I'm so stupid. Fucking dude, bro. I mean, yeah, I like the pull up. So when you have a pull up, right? So this would be me right here. I'm actually shredded like this on a good day. So this is going to be the level of resistance. So this bar is pushing this guy down essentially. Once he does the pull up and he gets above it, then he uses it as support. So at one given point, when you were like this, it was resistance. When you break through it, then it is used as support. It is very simple, honestly. I don't really have to get into deep. If you guys understand what support and resistance is, type one. If not, type two. Okay, sick. I see 99% ones, basically. So the ones that don't understand the two, it's probably more that you guys don't understand how you want to spot it or how can you trade with it, how can you enter, how can you identify it, which we're going to get into that later. But basically, resistance is what holds price and pushes price down. Support is what supports price and pushes price up. It's basically in the name. So once again, resistance pushes price down, support pushes price up. Resistance could be turned into support, support could be turned into resistance. Very simple. Write that down, and then we're ready to move on to the next point, which is goes basically hand in hand. What is an area of interest, which is also seen as AOI? And what is a key level? So, key level, area of interest. Area of interest, key level. Potato, potato, same fucking shit. They just found a different way on how to give this an identity. It's the same shit at the end of the day. A key level is a good area of interest. An area of interest is a key level. So, what is an area of interest? Well, if you think about it, if when you want to buy a trade, you want to buy a trade at an area of support. Now, that area of support has to be a key level. It's gotta be a fucking key level. It's gotta be an area where I'm interested in buying the trade. We have to buy at a support and it has to be at an area of interest. That area of interest has to be a key level. Well, we just go find a good area of support and it's going to be a key level. So, what is considered an area of interest or a key level? An area that has more than one rejection. Would you want, let me see this, stairs, right? Stairs. Would you want, no, steps. Mm, 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 mm. I guess I can use this for now. This will make sense just for now, only for now. So we'll use this right here. So let's actually just do this right here, right? Would you want, and again, this is just an example just for this right here. This is not going to be used again. So I don't want you guys to get confused. So let's say you are right here, right? You're right here and you want to get to this next step. Would you want to go to this next step if there is one stick holding this step? If there's two sticks holding this step, or if there is three sticks holding this step, what would make the most sense for you to then hop on? Would it make more sense for you to hop on this one, hop on this one, or hop on this one? We have step one, step 2, and step 3. It makes more sense for you to hop on which one of these steps? Correct. Correct. 3. It makes a lot more sense for you to be able to. Okay, so I'm very glad, Ashraf, that you asked this question, which I'm just gonna, I'm just gonna, let me see. Fuck. I'm just gonna end this once and for all. Area of interest. What was the other one? Area of interest, key level, supply and demand. It is all the same shit. There is no difference in between any of these. This is the area that you want to enter the supply where there's a lot of demand. And then area of interest, support and resistance is literally all the same shit. Supply and demand is a level of support and resistance. A key level is at an area of support and resistance. And an area of interest is at an area of support and resistance. It's all the same shit. AJ, brother, please don't fucking spam, dude. AJ from Norway. Fucking Norway people. So if I understand correctly, is the area of interest the last rejection? Dude, we're not even there yet. You're so ahead of yourself, bro. Fuck AJ. Norway people. Um, area of interest. Let me get into this after, right? So we're skipping a step, right? Which is area of interest and supply and demand. Let me actually just turn off the chat. Sick. Okay. So area of interest, supply and demand, key level, and support and resistance. All the same shit. Do you want to have? There's more supply and demand here than here. There's more of a key level here than here. This is more of an area of interest than here. It makes a lot more sense to take the step here than fucking here. So when this homie gets to step 1, you're not gonna, so like obviously you're gonna want to take the step here. So the way trading works is you're not taking a step, the market is taking the step for you. You make a bet when the market gets to that step if you want to enter or not. Personally, myself, when I see this dude step onto this shit right here, I do not want to bet on him that he is going to hold up because there's only one support that is holding that up. Fuck that. I'm good. Now, when he gets there and if it does hold up and he does manage to make it to the next point, cool. I'm not mad because I missed out on this opportunity that it was going to hold up. That's not how my strategy works. I've noticed over the course of 10 trades that when this dude steps on a step that only has one level of support or one key level or one supply and demand, the odds of him falling and breaking his neck is a lot higher than that. So it makes a lot more sense to avoid entering a bet on him going here than simply just waiting for him to come here. So when he gets to this next point, am I going to place a bet because there's 2 levels of support? No. We only have a solid area of interest, a solid key level, a solid level of supply and demand when there is a minimum of 3 points holding up the step that we want the market to take at that very moment. Now, let's say for whatever reason, the market from here makes it to here. Cool. Fantastic. We've been waiting for our moment. At this point, we've missed out on 2 different opportunities just because we saw the market going the direction that we wanted to, but we did not execute on it, which is fine. It's gonna happen. It's part of the process. We're gonna miss so many opportunities that you can't even imagine, but that is going to come with avoiding many losses as well. And again, we're going to get into that later into the area. So now that we're here at the third point, this is the person. Now we are at a key level, which is a minimum of 3 touches. We only enter and execute a trade at an area that has a minimum of 3 touches. This is what a key level, a supply and demand, an area of interest consists of. A point that only has a minimum of 3 points. Now, how do you find these 3 points? That will be discussed later inside of the bootcamp. But to give you an example, there's 1, 2, 3. That's a key level. 1, 2, 3. That's a key level. 1, 2, 3. So let's say we're going to execute this trade here. We look to the left. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This is more than a key level because there's clearly more than 3 points that's going to potentially hold or push this price down. Now, again, I don't want you guys to focus on that. Please don't ask me questions on how, but I want you guys to know that what an area of interest and a key level is where it has a minimum of 3 touches holding or pushing price down. Same thing if we were to flip that chart reverse. Can I flip this? I don't know if I can flip it. Oh, I could flip the chart. So same thing if I were to flip. Oh, dude, it does the same thing. The picture doesn't change. So obviously, if I were to get steps to the downside, and on the steps to the downside, if just basically do the reverse right here. So if there's 3 steps or 3 sticks pushing price down, and then you have price coming like this, you want to take it on 1, on 2, or on 3 structures that are pushing this price to the downside. Well, it's going to make a lot more sense for you to be able to actually take the trade on 3. Now, I know, like I said, don't stick to this. Don't make this your end all be all. I just want you guys to grasp the concept that an area of interest and a key level is a point where it has more reasons to execute the trade there rather than not. Area of interest, key level, supply and demand, it is all the same thing because it all comes back to support and resistance. If this makes sense, type 1. If it doesn't, type 2. Do you count wicks? We're going to explain that on the how. What are the 3 touches? How can you do this? That's on the how. That's on the how. Where do you mark the area of interest? That's on the how. Anything else aside from what I just explained right now is really on the how. If resistance level, that was a how. Is support and resistance easier in the line rather than candlesticks? That's the how. So you only execute trades how. Really can't wait for the stocks next week. Yeah. How far left do you look back? That's a how. Order blocks. Same, bro, same shit. Order blocks, same shit, dude. What if candlesticks have a wick on the side? That's more on the how. Can we yeah, we're gonna resume on the 3 touches. Yeah. Can we use support and resistance? That is how. Are there marked zones or are they lines? That's on the how. Sick. Perfect. So supply and demand is essential to buy a trade. Yeah, dude, it's all the same shit. Like you guys could forget about everything else here and you can forget about order blocks. Dude, it's all the same thing. The way order blocks is, they just put a bunch of different lines on the chart. They put this as an order block, and they put this as an order block, and they put this. And at the end of the day, that's just different levels of support and resistance, which again, I'm going to explain on the touches and how you can spot them later on the how. So order blocks is the same thing as support and resistance, and supply and demand is the same thing as support and resistance, and a key level is the same thing. We only use area of interest. We don't use any of this other verbiage because where you want to enter the trade is the area of interest. Area of interest equals level of support and resistance. Perfect. So if you guys understand type 1, if not, type 2. Sick. Perfect. Amazing. Now, what is a round psychological level? What the fuck is this? This is confusing. It's such a big word, and I definitely spelled it wrong. Did I spell it wrong? Psychological? Well, whatever. You know what? I want to leave it wrong if I didn't. So, you know what's funny? I learned English. I don't know if you guys know, but I'm Cuban. Like my original like I learned English at I don't know, like 10 years old. And then now it's like what I use because of like social media and stuff. But like I mainly speak Spanish. Like that's mainly what I do. So my English and Spanish, I mix it up all the time. So I don't know if you guys knew that, but yeah, like my writing is terrible, really bad. Like I suck at it. So what is a round psychological level? So there's many different ways on how to get a round psychological level. I'm going to kind of advance myself on how I use it just to make it so much simpler for you guys because you're going to get lost on all the other bullshit. And it's going to help you guys when we go and find how we can use it, right? Now I'm just going to tell you what it is, but I'm going to tell you what it is my way already. I'm not going to waste time telling you what the fuck and whatever. So a round psychological level is basically what it is. It's a round psychological level. This price point right here that I just grabbed this and I close my eyes and I just throw it. Right now it landed on 100.452. I get it. I throw it. Boom. 1.107.283. Neither of those two are round psychological levels. What a round psychological level is a level that is round psychological. So if I come here and I put 0.0, it's every rounded to every 500. So for example, here we have 1,6,500. Then we have 1,0,600. Just do this. Then we have 1,0,5. And we know we can just keep going. It's every 500. Put it here. 1,0,5,500.0 every 500. Now, what a round psychological is where big banks, where the markets and the market makers of the world, when they're gonna liquidate hundreds of billions of dollars, they don't want to do that shit at a fucking random number like 1,06852. For accounting, I could imagine that would be the biggest issue in the world. For the trades to, like the history of the trade, it would just be such a mission, I could imagine. They want to close all their trades at one number, a round psychological number, and that's it. Now, on that round psychological number is where you're going to have market either have big rejections from or big breakthroughs from, because big banks, the institutions of the world, they can have market orders, pending orders here to enter positions, or they can have liquidity orders, take profit orders from here. So as soon as they get to this point, they close it out and then the market reverses. If you have $100 billion on a take profit at this point and $100 billion gets liquidated at this very point, you can expect a rejection. It's just gonna happen. It's just part of the process. or if you have 100 billion pending orders to execute the market, once we get to here, then we can break and we can have a big push to the upside. So you always want to enter or exit a position at around psychological level, whether it's as a level of support or a level on resistance. It is used as both. Now write this down. Around psychological level. You always want to either enter a trade there or exit a trade there. Always want to enter or exit a trade at around psychological level. And it's not something that it's going to happen every single time. It's something that it just adds to the strategy. And again, it'll make sense later on. So that is basically what a round psychological level is. It's an area where the big banks and the institutions are entering trades or liquidating trades, and we make a decision based off of that. If they're going to potentially liquidate, do we want to close there? If they're going to enter, do we go with them? So it's just something to add to your take profit and to your stop loss. Now, what is a take profit? What's a stop loss? It's literally next. Now, if you understand what a psychological level is, type 1. If you don't, type 2. How I use it, how to spot it, how to this, how to that, how to that, that is next week. Please. Okay. For the rounds, for the people that have questions. So it's every 500. Yeah, it's for the way I use it, it is every 500. Some people do it every 250 or every 100. It is every 500. Correct. I'm a bit confused, but on the general idea, please. Gurky, that's her name is. Just randomly every 500. No, there's nothing random. It's literally calculated every 500. Like, let me just turn off the chat 1 second. You can literally see it right here. 10500, 104 500, 10400, 103 500, 10300. It's every 500. There's nothing random. For example, right here, it's we would have to like go in, and it's every 500. So if you notice here, 2.09 500. If you add 500 to it, you have 2.100. You add 500 to it, you have 2.10 500. These are just round psychological levels in the markets. So let me see how I can make this make sense. Perfect example could be Bitcoin, right? So when you have take profits for Bitcoin, you can have it at every round level. So you can have it at 50,000, 51,000, 52, 53, 54, 55, 56, 57, 58, 59, 60, 61, 62. Every 1,000 is around the psychological level. But we don't do it every 1,000. We do it every 500, which should be this next one here. So we have it like this, which is 56,000, 56,500, 57,000, 57,500, 58,000, 58,500. We do it every 500 on the chart. So it's the round psychological level for that market. For Bitcoin, it's every 500 of the price of Bitcoin. Does that help? If that makes sense, type 1. If it doesn't, type 2. Okay. I see some 2s. Fine. Sure, we can take more time on it. Okay, look, great question, Oli. So this is what Oli asked. Let me just copy it. Shit, does not let me copy it. Says if I have 105,783, then I round it up to 10600. Yeah. Which one is stronger, the 500 or the full round? There's no difference. If the trade passes the round psychological, no, that's on the how. How important? That's a how question. That's funny. They're literally asking a how question. Why every 500? Just because it's what I've seen proven over the course of 6 years, what makes the most sense. So I'll show you guys another example, right? For example, let's show you guys a real live example right now. So let's say we're trading right now this trade, right? And whatever, we want to have our take, like we're in this trade right now. We can ask ourselves, all right, do we want to, whatever, this is super random, like it's not hard, but I'm gonna just make a random one. So we have here 198, 500, right? 198, 500. And then we have literally right here, 199. Which is right there. Now we ask ourselves, do we want to enter the trade under the round psychological level or above it, and then we use it as a take profit for 199? Or do we just want to not put 199 valid and we just want to make it 199, 500? And on 199, 500, clearly there's a level of resistance. You look left, there's this, there's that. These are just different things when you're in a trade that you want to ask yourselves. Do you want to enter the trade under it or above it? And do you want to have your take profit here or here? Now, that's more on the how, and trust me, I'm going to explain that when we get there. But if you like, all you really have to understand about round psychological level is what it is. It's every 500. That's all you really got to get about it. Like, there's really nothing else on what a round psychological level is. I mean, it's what it is. It's every 500, and it's where big banks want to enter or exit positions. That makes sense, type one. If it doesn't, type two. Is it on every time frame? It literally does not fucking change. The numbers are the same if you go from high to low. It's the same. So stop loss every 500. Dude, I haven't talked about that at all. Okay, I think all of you guys got it. It's really a lot of the questions that you guys are asking are on the how, and trust me, when I get to the how, you guys are gonna understand so clearly. But a perfect example right now would be Bitcoin. So right now, Bitcoin, we're at 7,411. Our take profit would be round psychological level 174, 500. If we already broke through 174, just get it here. Fuck, I knew I was gonna do that. 174, 500. Cool. My next take profit would be at 175. That's basically it. 175. Oh shit. We already got there. Cool. My next one would be at 1755. It's very simple, guys. It should not be that difficult. Right. Once you get to the how, I'm going to explain to you guys how to properly use it. All you really got to know is that it is literally every 500. If you got that, you're good. Cool. If you guys understand, type one. If not, type two. Sick. Perfect. I see all ones in the chat, how you use it and all that. Don't even worry about it. All right, cool. Now, what is a take profit and what is a stop loss? All right. This one should be hard, right? Because it's not like what the fuck it means. It's not like if it's not what it literally says that it is. Let me take one. It's not like it's not right in the name, right? It's like, what is a scammer? I don't know. I have to Google it. A scammer is somebody that takes someone's money. Oh shit. What the fuck is that really that? What is a, I was gonna think of another funny one. It's in the name. What is a take profit? It's where you want to take your take profit. What is a stop loss? It's where you want to stop your loss. That's it. That's really fucking it. If that makes sense, type one. If not, type two. That's really it. There's really nothing else to it. What is a trash can? Let me see. That's a trash can. No, I'm kidding. Oh, oh, fuck. Come on, guys. You gotta make it funny. You gotta be it. All right. A take profit is a fucking take profit. A stop loss is a stop loss. It's basically it. Take profit is where you want to get out on the trade on your profit, and a stop loss is where you want to get out, where you want to lose the max. That's basically it. Now, how we use this and how we're going to use this correctly, that's what next week is going to be about. Now, write this down. You always do you set a take profit on a round psychological? That is on the how. Okay. So you always, always, always mandatory need a stop loss. There is no fucking debate on that. You need a stop loss always. Not 99% of the time, 100% of the time. You need a stop loss always. So put down, you always need a stop loss. You don't always need to place a take profit. Now, how that works, what the fuck do I mean? Dun, dun, dun. That is exactly what I'm going to talk about next week. You always need a stop loss. You don't always need a take profit. This is what we're going to talk about next week. I'm going to explain to you how to place your stop loss correctly, how to place your take profit correctly, how to get out correctly, and how to get out correctly. Simple. If you guys understand, type one. If not, type two. Sick. Amazing. I'm in literal, like, I love it. All ones. So a stop loss is to minimize your losses, and a take profit is to, yes, correct. All right, cool. Next is risk to reward. What is risk to reward? It's what you're gonna fucking risk versus the reward that you're going to get. Simple. You're going to risk right here. Let's say let me put it on simple. Now we're gonna keep it here. Fuck it. We're gonna risk 100 points to gain 300 points. So this is our risk to reward ratio. This is always a 1. So the stop loss is always a 1. Just put here always a 1. And this is always an open variable. If you notice, the ratio goes up and down depending on how big or how small I make this. So if I have it at this point, we have a 2 ratio, which whatever we risk here, we're going to double it. Now, if I put it here, this is going to be now a 3. So whatever I risk here now turns into 3. Whenever I then do this, this now turns into a 4 because now we have a 1 to 4 risk to reward ratio, and 5 and 6 and 7 and 10, whatever. The risk to reward ratio, ladies and gentlemen, is what will make you profitable. Everything I've said up to this point is bullshit if you don't use this tool correctly. If you want to be the guy that wants to have a 1-to-1 risk to reward ratio, so whenever you risk something, like, just look at that. That shit just looks ugly. Like that, like having that right there No, I can't say that. Let me think of one. Oh man, what the fuck do I say right now? I can't. No, I have to say something more appropriate. Let me think. Let me think. Let me think. I just want to see what you guys are saying. Having a one-to-one, I yeah. Having a one-to-one is just not it. All right. It's just not it. Just trust me. Having a 1 to 2 is the bare minimum that you need to have when it comes to trading. It is the bare minimum that you can ever use. The risk to reward ratio is what is going to define how much you're going to make every single time you lose. When you lose, you always want to have your wins outweigh your losses. You can never have an even win weight ratio to your losses because you're not going to be profitable. Your wins always have to be bigger than your losses by a minimum of a 1 to 2. And I always use a minimum of a 1 to 2.5. So it's 1 and 2.5. Like, think about it. When you want to pull up to a family party, you want to be that guy that pulls up with one chick. Like, think about it, right? One girl. When you pull up to your family party, whoa, what the fuck is this? No, no. Let me see. Do you want to be that guy that shows up to the family party with one girlfriend? I got a couple. Do you want to be like this? Yeah, you're happy, but you'll probably end up in a divorce, honestly. That's just what's going on nowadays. Now, do you want to pull up to your family party? Not like this guy right here, like this. This is where you pull up to your family party and you're thugging. Your family loves you. Like, people are gonna want to have a conversation with you. This, you're the man of the hour. And now, if you pull up with fucking four or whatever, dude, you're the man of the party, bro. If you pull up, that looks like a family. Fuck. This is a terrible example. This is a bad one. I'm glad you guys understand quick. This is a terrible example. It's a family. Jesus. Fucked up. I fucked up on this one. All right. I make mistakes, guys. So you want to pull up to your party, your family party with a minimum of 1 to 2. That's the only way you're gonna really grab attention. If you pull up with a 1 to 1, you're like everybody else there. You're not doing anything. You got to pull up with a minimum of a 1 to 2. And if you're baller, you're really balling out there. You pull up with 1 to 2.5. So you'll go with two, and the third one that you might have as your chick as well, and it ends up becoming your girl, and then you got three. Does that make sense? Type one if yes, type two if no. Okay, good. I'm glad it makes sense, bro. I'm glad it makes sense. Why does a trader break up with a 1 to 1 risk to reward? Because yeah, a 1 to 1 just never works out, dude. Like, how many times? I gotta do it again. Right? Couple, dude, couple two, couple three. How many times have you ever seen a throuple in a non-happy relationship? Think about it. Never. Whenever you see a throuple, they're always happy. Always, dude. It's just how it goes. How many times have you seen a couple in a fight? All the fucking time. This is not a happy relationship. This is a very happy relationship. And then this, dude, you're just way too much out there. So I'm also not the best guy to get this type of advice from, right? I'm just here on the trading side. I'm just putting an analogy so you guys understand. All right. So you just want to have a minimum of a 1 to 2 risk to reward. Just put that in your mind. That's literally it. If that makes sense, type one. If it doesn't, type two. I fucked up on this last analogy. Fuck. I really did. But you guys got it, which is what matters. Yeah, that was such a battle. I got confused. Ah, dude, you'll get it next week. I'll explain it better next week. All right, sick. So that is everything for today's, ladies and gentlemen. So today we went through what is a candlestick and what is a candle wick. We went through what is a level of resistance and what is a level of support. We went on what is an area of interest, which is the same thing as key level, as supply and demand, as order blocks, as all this. We understand now what a round psychological level is. We understand what a take profit and stop loss is. And I definitely know for a fact we all know now what a positive risk to reward is and what is needed. If all that makes sense, put a 1 in the chat. If not, put a 2 in the chat. Sick. Amazing. Amazing. Sometimes the analogies that are edgy, you get them even more. People just get it more because it's edgy. So it's good. I'm glad I did that. All right, sick. What questions do you guys have regarding what we talked about today? Great job. Great job, Fire. Thank you guys. No questions here. I love it. When are the recordings going to be available? As soon as possible. Am I a family man? Yes, I am a family man. I want to have a big family, 6, 7 kids running around, or even more. Are round psychological levels more important with trades? Well, it's more on the how. Explain that on the how. If a long wick is on top, what does that mean again? Sorry, you're gonna have to watch this recording. I'm sorry. Enter and exit on a psychological level. I believe I said that. Yes. I'm sitting next to my wife during your risk to reward ratio example. Ah, dude. I'm just glad I didn't say the fucking first one I wanted to say. I'll tell you that. I'm glad I didn't use the first analogy. That one tripped you guys out. The first one would have been bad. What's your quote of the day for the team? I think I should start doing something like that, where I have like a quote for the day that I post on Instagram. You know what? Who said that? Francis Loduca. You gave me an idea. I'm gonna write this down. Quote of the day. And I'm just gonna say it every day. Today's quote of the day is make trading great again. That's all I can say. Thanks for putting us in our place. We want to go ahead with the question. Thank you, Kevin. Is round psychological level only for Forex? It can be used for stocks too. I'm not sure how it works on stocks, bro. I'm not super experienced there at all. Joseph, I don't think anything about other brokers. Maybe. Thank you guys for all of the compliments on today's class. Trust me, it's day 3. We're only getting warmed up. Where you guys are gonna really start having a fucking like a glitch in your brain is gonna be on the how, and then really on the how I do. So trust me, just be patient. Would you call 102,300 a psychological level? Dimitri, is that every 500? Yes or no? Clearly not. So it would not be. It's every 500. How many pips is your stop loss? That's on the how. Dimitri tripping. Literally, bro. Fuck. I wish you guys would see. I wish you guys would see some of these questions. Yes, the only broker I use is LQH Markets. Okay, cool. Yeah, all these questions are just on the how, and they're all yes. All right. So put a W in the chat if you guys are ready for tomorrow. We got 4 p.m. tomorrow EST. Thank you guys once again for showing up on this early morning session, and we'll see you guys tomorrow. I'm very excited for this final of the week. So next week we get into the house, and what I want to do is on Saturday or on Sunday, I want to not revisit the times, right? For me, I'm fine, right? I want to do it for you guys because you guys are the ones voting on the time. We'll revote on Sunday exactly if we continue with these time slots, excuse me, or if we are going to change the time slots to something else. It's whatever you guys want. So I'm not going to do a poll right now. I'm going to do a poll on Sunday. We have to at least go a whole entire week like this so people can get into the rhythm and get used to it. So just want to do it for some, right? So, and appreciate all of you guys for being part of another day inside of the boot camp. I hope you guys understood everything with the analogies, and trust me, get ready because we're only gonna turn shit up from this point. See you guys tomorrow at 4 p.m. EST. Make trading great again, and set and forget.